The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. The host of my own show. At least I'm the host of some show. Anyway, it is an interesting day as we're having kind of the hangover day from Friday. And what it is options expiration rollover. Normally it takes somewhere between midday tomorrow to the end of Tuesday until all the option positions that basically expired on Friday work their way through the system. If you are an option market maker, you're going to hedge your positions about 7 or 8 days before expiration. And by doing that, you may be short some stocks and long some stocks. Basically, you took the opposite side of whatever option you had out there, and you just wanted the time to decay out and keep your premiums. So what happens on Monday and Tuesday after expiration? Statistically, one of the highest days of up and down chop that you will get. Not so much as a direction, but a lot of times you'll see it up 10 points, down 10 points, up 10 points. That's not uncommon to see some kind of action like that Monday and Tuesday. They need some market action and some volume to really get it going. I suspect it's going to roll on through tomorrow for a variety of reasons. But right now we are looking at the S&P cash up at 1898.80. That's also happening with just a tick under 2 billion shares on the New York Consolidated Tape. To give you an idea, when we were starting last week, we were closing in above 3 billion shares at this time. So this is one of these days where at least some of the angst, I guess everybody's using that word lately, the angst is over in the markets, and everybody's kind of having a sigh of relief. But we're basically up at the highs right now of Friday, and maybe a point over did we get, 1899. And as we look at that, it is my idea that we're probably going to have chop maybe until Thursday. But my guess is it's going to be hard to make any kind of decent money. And if you were to think this morning when we started, by the news that was coming out, if we'd been up 12 points, you probably would have said I was insane. But this is the other side of a short squeeze rally, a counter trend rally in a down move, and that does not mean that it instantly fails a couple of days later. In fact, we're going to talk about that and some other things today. But I digress. And I always like to start off with a little bit of history. And today, in 1987, Wall Street takes its worst plunge ever, other than, I think, in 1850 or something, when there was only one share trading or something. I don't know what the deal was then. But any point in the last 125 years, this day in 1987 was the worst Wall Street ever had. The Dow lost 508 points, or 22.6% in one day. The worst daily loss on record, closed at 1,738.74. The traders on the Wall Street equity desks sit watching in the ticker and shocked dead silence as it plunges faster and farther than anyone alive has ever seen. In fact, is anyone until, I think it was 1901, I was actually reading some history this weekend on the stock markets and looking back. But by day's end, more than 500 million shares have changed hands, and traumatized analysts are predicting a severe recession. But 1987 was famous for the day that market makers and specialists and all the other people that are supposed to be in when a market plunges just walk away. In fact, the famous saying of they just let the phones ring comes from this real crash in 1987, he said. And a good day, because these are the days where you can learn a great deal, as we did last weekend. I think probably last week or the last couple of weeks are probably some of the best education you can get. Whether you won or lost, should be some of the most highly prized education that you will ever get in the market, because guess what? It's done it before. It's going to do it again. If you learn to not have fear, but be able to react, you'll figure out that there's going to be a couple of times, maybe 3-4 times a year, where you can make outrageous money in the market. It almost always means being open to what the stock market's telling you, the equity markets, and getting ready for and waiting and having the ability to wait for the fat pitch. And I think hopefully we exhibited that last week. But it takes a lot. In fact, I was reading Jesse Livermore's book again this weekend. One of the best stories that he ever has in there is about a gentleman that's going to have a duel, and the one guy that's basically going to be in the duel says to his buddy, says, I can snap a wine glass stem at 20 paces, so 50 yards, right? Or 60 feet, 50 feet. And he goes, that's all good and well, but how well can you shoot when the wine glass has got a loaded gun pointed right back at your heart? And that's really the difference. If you can, and if you were able to pull the trigger last week for the bounce, that is all the courage you will ever have to prove to me. But that is exactly the kind of action that you need to be able to take to make the big bucks. You can still make money, but I think there are a few times when the risk-reward is so astronomical that you have to step in, and I think last week was one of them. Anyway, just think about it. Always good to look back to the past, because there is nothing new on Wall Street. Everything that's been done has been done before, and speculation is as old as history is recorded. We talked about options rollover. It takes normally late into Tuesday to get the old equity positions off and the new ones on. I try to, if I don't have a new position, I try to stay out of it. Normally there's not a whole lot of money to be made. We're 13 points. But compared to the 20, 30, 40-point days we've had, pretty quiet. And my guess is that we're probably going to stumble back up. And the question is whether or not there's enough juice in this market. We have already had the normal morons come out and start giving astronomical projections for the S&P by the end of the year. It would be no better than me projecting the S&P was going to 1. With them saying it's going to 3,000. So it's not uncommon. One of the things that you also need to worry about is the continual upgrades and shorting a little bit too early. That's always the problem. Once the bears get a little bit of taste of blood, just like real bears, you have to watch out. Anyway, you can give me a call at 877-927-6648. That's 877-927-6648. We do have a special. It is on the front page of TFNN if you go to it now. We have probably, for people that would like to get into my newsletter and have thought about it, we have the best value on a 30-day trial. It's $30 for 30 days, 30 for 30. And the best renewal price we have ever offered if you are a current subscriber of mine for the Path of Least Resistance. And you can see some of my trades on there, but go to the front page of TFNN and check it out. Of course, Apple is after the bell tonight, and we'll see how that's moving the markets right now, up $1.69 at $99.36. My guess is that they're going to try to get this back up to that 101, 102 area after the bell. I suspect unless they come out with all kinds of forward moving, i.e. saying that they sold stuff that they really haven't sold yet, basically packing the numbers, it's probably going to be mildly good. And I think you've already got $1.68 in there. Could you get another buck and a half after the move tonight? I think the answer is yes. We've also got CMG and Illumina after the bell tonight. So we are starting the Super Bowl of earnings, and I suspect we're going to have that kind of volatility that intraday traders crave, and a lot of times long-term investors hate. But I think that there's going to be a great deal of money to be made, probably not in the next couple of days. But I think when we get into Wednesday, Thursday, there's going to be some opportunities setting up some nice trades. And it probably won't be the market. I have a feeling that the broad market's going to be somewhat flat. But there's going to be opportunities for individual stocks, especially as we see these things move on. We talked about, we didn't talk about IBM getting slaughtered this morning. This is one that you know that is a great example of just how long they can distribute stock. This thing has been going on for 2 years of distribution. It is showed more signs of weakness than a 500-year-old bridge made out of wood. It did everything in the world, but they were able to go back and buy shares. They were able to go back and move money around and do everything. They made their shareholders happy, and mostly the big street name happy, by giving them a lot of time to get out the side door. And, you know, basically today they said those buybacks, they're going away. You probably shouldn't be thinking too much about dividends. And guess what? And here's the quote. We saw a marked slowdown in September in client buying behavior, and our results also point to the unprecedented pace of change in our industry. You can read that as you better have a parachute on or you're going to go splat on the ground. IBM has looked like it could get down into the 125, 130 range for probably 2 years. And this is probably one of the best jobs of stock engineering. And you can see how they distributed this stock over the number of years, how these big hedge funds and traders continually sold the shares out. And pretty easy to figure this one was going to fail. The question was when. They basically were able to pound on shorts for a couple of years. The shorts look like they're going to be getting their revenge over the coming days. Again, check out my newsletter on the front page of TFNN, 30 for 30, 30 days for $30, and, of course, the least expensive rate forever for resubscribing to my newsletter. So if you are a subscriber, check that out also. And I think we've got a lot of money to be made the next couple of months, maybe all the way to December 15th. So let's give it a whirl, folks. We'll be back in a minute. You can give me a call at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I wanted to spend some time on a question, because I think while we talk about it here at TFNN, and we don't really make anything bigger than I think it should be, other than it's a absolute great tool for using Fibonacci's for all manner of things, including confluence and retracement levels and Gartley patterns based off them. We really don't spend a lot of time going through why they are important. And I got an email over this weekend, several of them. Apparently, there's either a video or something going around about a study that was done, I don't know, in the 70s. I found the first copy of it. But it was I'll just read you the email. He says, I've read their scientific studies of Fibonacci numbers, and they prove that they're bogus for trading. And it's Larry Williams and Philip Kogan who writes a thing called the Buttonwood column in The Economist. Both these guys, well, Kogan, no trader at all. Larry Williams looked at it a ton of time ago. And I suspect that they were told how to use it by someone that didn't probably have their best interest at heart. So they looked at it and said, maybe this isn't exactly how they work. And I think I want to get a little bit into it, but part of what has really hurt Fibonacci use and adoption, I think, is a great deal of misinformation that's been put out for years, and it's now kind of become part of the folklore, not so much in trading, but especially in a lot of other aspects of where it's supposed to be used. One, I don't believe that it is superstition. A lot of people apprize magical powers to Fibonacci numbers. I'm going to tell you why they work, and mathematically, not because a angel flew down and told me, or there's some bizarre reason that has to do with any amount of pseudoscience or anything else. I think that is somewhat the problem with that, and we're going to get into a lot of the things that people say that it has to do. I would not get into a plane that didn't I wouldn't get into a plane with a pilot who didn't understand the physics of flight. And I think just by saying that Fibonacci's work is probably doing us a little disservice in that we didn't really go through and figure out how they worked. That they do. Because I'm going to show you why I think a lot of people make mistakes with Fibonacci levels, and maybe think that because we show a number that's very precise, that it should be that way. Anyway, we're going to get into it here a little bit. Not to drop a little bit of doo-doo on my own point, but you can demonstrate things for a while, but it would always work better if you truly had the real understanding. Aeronautical engineers argued for 100 years over why a wing created lift. And the idea was a theory that it took longer for air to travel over the top of the wing than the bottom of the wing, because the bottom of the wing was flat and the top of the wing was curved. Therefore, it took longer time and created a vacuum on the top of the wing. And now that we have high-speed cameras and actually stealth bombers and F-16s that fly without lifting wings, it's pretty much been proved incorrect, let me put it that way. But even into the 80s, engineering students were told that the Bernoulli principle was the reason that planes flew. Not true. The old Newton principle of a equal and opposite reaction. Basically, you are pushing yourself higher on a wing when it's below you. But we're going to get into all the fallacies that's out there. And, even when I was, I guess I could do this. Even when I was a kid, I'd stick my hand out the window, and if I turned it just a little up, I know my arm wanted to go up as we went down the highway. It was no more curved on the top than it was curved on the bottom. So experience can tell you a little bit. I never really quite understood it or really bought it. And I think all it took was me sticking my hand out the window to really experience it. Anyway, when we get back, we're going to go through all the fallacies of Fibonacci that are a prize to it. Then we're going to get to the truths where we can make some money.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we pick back up, I just want to go through a few things that I've been thinking about over the weekend after seeing some people throw some cold water on Fibonacci's. And I would say that it deserved it, not because what we do, but because there are so many people out there kind of beating a drum of mysticism that I don't think probably needs to be around. I called it my newsletter, Gilding the Lily, where, you know, if you've got a beautiful flower, do you really need to put gold on it or spray paint it? I mean, it's pretty beautiful already. I don't think that putting on lie after lie is an issue. Anyway, anything that you claim, at least I want to look when I look at it, needs to be falsifiable. I.e., if you tell me something in the stock market that will make me money, I need to be able to test it somehow. And if you can't tell me how it would be wrong, then I can't falsify it. But a pretty decent kind of way to think about a market, either a tool or anything else, is can you say when it doesn't work, when it does work? And one of the best sayings ever about falsifiability, that's not even worse, falsibility, was a gentleman named Wolfgang Pauli, who famously, in a huge heated argument, who said, it's not only right, it's not even wrong, because you can't prove it's wrong. when you make a statement. To me, I can't use anything unless I couldn't get in an airplane if the guy didn't know how it was flying, and I can't use a tool if I don't know how it actually works. One of the problems with Fibonacci's is that we get kind of the aluminum foil crowd, helmet crowd around that truly wants to believe. And I actually would hope that you would be a little skeptical about the way things work in Fibonacci's. And just think about it. It's easy to poke fun at the UFO guys, but to me, a healthy amount of skepticism is worth it. Of course, Fibonacci numbers have a nice little symbol out there. It's also known as the word phi, P-H-I. And one more word, statistical and applied probabilistic knowledge is the core of knowledge. Statistics tells us whether something is true, false, or merely anecdotal. It is the logic of science, and one of the best quotes I know from Nassim Taleb, one of my heroes in dealing with randomness. The first problem with Mr. Leonardo, which we'll get into here in a second, is that even what he's attributed to making, i.e. the Fibonacci sequence, was something he copied that he got from the Arabians, who they stole from the Hindus. He didn't even do it. One of the nice things, though, was, we'll get into it also in a minute, just all the neat stuff he did do. There's no end to the amount of things that you can find on the internet that the golden ratio, the 1.618 number, is applied to. The Pantheon was finished 125 years before Euclid even wrote his Book of Elements and how to figure it. Up to that point, there's absolutely zero evidence anybody knew about it. Also, if you actually take the measurements of the Pantheon, you find out that they don't come anywhere close to the golden ratio. You will find out that what people did was take pictures at various angles and scale them so that they work. They used giant lines that would be the equivalent of putting up banners 5 foot wide on the edifice itself, and said, well, you know, these lines, if you make them big enough, they'll basically fit over anything. If you'll read that the Gutenberg Bible was a perfect 1.618 ratio. Well, unfortunately, it's a 1.5. TVs, sorry, also, they are not the golden ratio, 1.33 for the old TVs, 1.77 for the new ones. The navel in Leonardo's Vitruvian Man is just, it comes close, 0.604, but not 0.618. The first real case of using Fibonacci's in building was actually a gentleman that built a bunch of them over about 20 years. And he's the only one to known of it. Everybody, if you go into a meeting of architects, everybody will say, you know, we were taught that in college. And they go right out and they don't build anything to that ratio. The first use in art was in the 19th century, and actually, if you're in Tampa, you can go down and see it at the Dali Museum. He was one of the few people that actually put it into his wonderful thing. People also say that the nautilus shell is a Fibonacci spiral. It's not. It's a logarithmic spiral. Rather embarrassing for a college that actually made a building and called it the Fibonacci spiral, only to be proven that it was a logarithmic spiral and not from Fibonacci's work out here. Of course, there's a lot of people talking about the perfect triangle, the beautiful triangle. It is the most chosen by people out there. They've actually given multiple tests all over the world and on all societies. Basically, the one at the perfect ratio is usually one of the least picked of the bunch. There's all, like I said, in the Vitruvian Man, the Fibonacci ratios would, if they actually were truly made on a person, they would look like the characters and the characters from Avatar. Those truly are what humanoids would look like if they were truly made at the 1.618 or even the 618 or even the 382 different ratios used in it. Supposedly Mozart used phi in composing music. Sorry, that's also a lie. So we've got a ton of people that make Fibonacci numbers in a great deal of places as some kind of magic, Halloween parlor trick. But mathematics aren't that way. All numbers are magic in the same way. I'm going to show you exactly why all series, whether they're Fibonacci's or not, we're going to look at a couple other series, and they all act the same way. The powers of phi rounded up make the same kind of sequence no matter what. And if you believe that, basically, I'm going to show you in a spreadsheet, they will all converge to the golden ratio eventually, some a little sooner than others. Let's just look at a spreadsheet, because I think this is the best example of using that. Now, if you talk about Fibonacci numbers, the first one and the second one in a Fibonacci sequence are going to be 1 and 1. And when you actually put those together, you're going to get 2. You're going to add 2 and 3. You're going to get 5. And when you add 5 and 3, you get 8. When you get 8 and 5, you add that, you get 13. And that's how you make a Fibonacci sequence. And supposedly, that is incredibly rare. Nothing else in the world would do that. And of course, the next thing you do, and where you get the golden ratio from, is being able to figure out that if you take any number in the sequence, in this case 5, and you actually divide that number by the number below it, in this case you divide 5 by 3, it's going to give you 1.66. If you divide 8 by 5, it's going to give you 1.6, and continuing on. Now, the thing is, no matter what you do, after a few iterations of that, you're going to go down to 1.618. So, no big deal. Well, let's see what happens if we change something. And that is, let's say that we make the first number 2 instead of 1, and then we see what happens. Guess what? By the time we get down here to about the 10th line on it, 1.618. So it doesn't matter the order. It can be larger, and it can be smaller. And guess what? These number series all do the exact same thing. Now, over here in the third and fourth columns, I have what are known as the reciprocals of Fibonacci's, and that's what we use a great deal of out here, the 382 and the 618. And they do the exact same thing. Of course, you get those numbers by dividing the number, at least the 382 one, by dividing the number. If you're going to use the 4 in the sequence, you divide it by the 2 down, which would be 11, and that's going to give you the 0.42. If we do the regular Fibonacci numbers, just 1 and 1, you'll see that if you took 5 and you actually take 5 and you divided it by 2 up, which in case is 13, you're going to get 0.37. And for the bigger number, the 618, it always comes from dividing that number by the number above it. So in this case, if you divide 5 by 8, it's going to give you 0.6. And by the time you do this a few times, it always moves down. You're always going to get, within a few little clicks out here, a 1.618 and a 0.382 and a 0.619 or 618. So it doesn't matter the order. It doesn't matter where you start. I need somebody in the den, if they would, to give me 2 random 4-digit numbers. If they would, as we're going to wait here for a second. Just anybody, all of you, none of you, just type in a 4-digit number randomly, if you would. Okay. Thank you, Mr. Z. He was first to the punch. 3245 is our first number. Second number is 43, 62, and let's look at it. Okay, so by the time we get down to the about the 5th, 7th time we do it, 1.618, 0.382, and roughly 0.618. It doesn't matter. This is a characteristic of all numbers. Oh, and we've got another one. We'll do that one too. 555 and 2345. There's no magic in specific numbers. Within a few digits, That's what you get. And the whole idea of the golden ratio is that if you put a number series together, it doesn't, and what we did here, if you want to look it up, is called Brady numbers and Lucas numbers. But the idea is that in math, there's a ratio in math, and that ratio is called the golden ratio. And it doesn't matter if you do a number series and you keep adding numbers together, they always have a ratio over time. And that ratio, if we went to 16 levels here, but if you go to 100, you're going to get within probably about, in 10 digits, you'll probably be accurate. So the idea is that number continues on, kind of like pi. But you can get incredibly accurate over time. Now, what I do want to call your attention to early on, okay, is what happens to the first few numbers. Let's go back to the standard Fibonacci numbers where we use 1 and 1 as our seeds. The first time we get and do the division, it's 2. It's 1.5. And then we're getting awful close to the 1.66. So I'm going to point your attention to that, especially when we start looking at things like confluence numbers and Gartley patterns. The more that you go back and add and subtract numbers, more and more the ratio is going to come back. Now, are these magical numbers? Was there a ghost that whispered them in my ear? No. They've been known since Fibonacci's time, and there's just a lot of bogus science fiction. And again, I suspect, although I do not know, I think a great deal of this came in architects in the 50s, and then in the 70s, Prechter, and I don't know if it was him himself or a lot of people around the original workings and doings of his Elliott wave theory, may have blown a lot of this stuff out of truly proportion. Maybe that's the best way to do it. And I suspect that when Larry Williams did a lot of his work that keeps floating around every once in a while, that's who I think he was listening to, because it was the big guy of the day. And it isn't. But these numbers are not magic. It doesn't matter where you start from. As long as you keep adding numbers together in a number sequence, they all pretty much come out to this. And that's why it's called expansion theory in trading. The idea is it works. Now, we've had a little fun here. Interestingly enough, another way to look at this is if you take the golden ratio and you raise it to the power of 2, it will always pretty much come right back into the way that the Lucas numbers work out. I'm not going to get into this too much because it's a lot of who shot what, but very interesting that the numbers actually work both ways and the ratios work both ways. But if you want this spreadsheet so you can play with it yourself, you can email me at path@tfnn.com. It's a good understanding of where the numbers come from and why one movement to the next when you use them Fibonacci numbers may not be as accurate as when we start using things like confluence numbers, where we're using multiple numbers and we get down into where they actually start looking at that 382 and the 618 and the 782 and the other minor numbers that come out of Fibonacci's. The more you use them, the closer they're going to get. And that's why patterns over time are more accurate, in my opinion. Anyway, when we come back, we're going to finish up with Fibonacci's.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we take a quick snapshot of the market, going nowhere fast, up 12 points, 1899, 2.25 billion shares on the consolidated tape. Want to wrap this up in the last few minutes of my show. I will be here for the next hour, and we'll get into stocks in that part of the hour. But it is interesting. Now, how can we actually make money now that we know that these Fibonacci's pretty much a ratio that is in math if you use it over time? To me, the answer where Fibonacci's truly work, and there's scientific evidence for it without any ghost or UFO theories or aluminum foil helmets, is in nature, especially in plants, in trees, in all manner of things. But the way I tend to think of it and thought of it early on when I got introduced to it, because I went out and tested it exactly like Larry Williams did and came up with the same answers he did. I was naturally or lucky enough to have Joe DiNapoli one day at least tell me a little bit of the way he was thinking about these. They are logical profit objectives, or logical places to take your cash or to place your orders. Now, in nature, we see that leaves and branches are put out at these Fibonacci numbers, and there's a good reason why. A four-leaf clover is so unfound And that is because of the way nature works from 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5. So you normally skip over a 4-leaf clover. It is rare and an anomaly. But what we want to think about is the way that you use Fibonacci numbers should be more like a leaf. And the reason that Fibonacci's work so well in nature, especially things like plants and trees, is that they need to be able to put their leaves out and get the most sunshine without blocking the other leaves, and also at the same time probably angled up a little bit to catch the rain and have it go right down the stem of the or the branch and go to the base of the tree or the base of the plant and soak into the roots instead of just wash off the top of the ground. So there's two real things. You've got millions and millions of years of natural selection. That natural selection showed and worked for the plants that put their leaves in the best spot. And guess what? It's Fibonacci numbers. And that's, I don't think you have to make it any more magical or superstitious in putting numbers out there. They are just as nature, the best place to think about us getting our and taking our cash. Also, a leaf is not a string. They're pretty broad out there. They take a little bit of room. So if your next Fibonacci number is off 15 or 20 cents, don't get too excited about it. Nature is not that perfect. It pretty much, these are the numbers we're looking at, but it's a little wider. Also, when you use numbers, especially when they're not very far apart, like I showed in the spreadsheet, the expansion theory you're using is probably going to be a lot wider, and you can see numbers like 2 and 1 and not that golden 1.618 that we all cherish as mathematicians. Those guys live and die by those numbers. As someone that just knows it's a great place to put your leaf and your cash, I got to put that together. It's got to be a quick saying out here. Anyway, when we come back, we're going to talk nothing about stocks, if I've had you glaze your eyes over. If you want any of this, if you want this, I've got it all written up. You can email me at path@tfnn.com, or if you want that spreadsheet to play with, email me at path@tfnn.com. I will send it to you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.